Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be looking at the Bank of Japan policy meeting coming up this week. And of course, the Bank of Japan is the first major central bank to meet in the new year. It shocked markets last month when it tweaked its yield curve control strategy, sending the yen soaring higher. I'm Christina Marujos. With me today is our lead investment analyst, Rafi Boyajian. Rafi, there is growing speculation that the Bank of Japan will further adjust its policy in 2023. Do you think it's something we'll see as early as this week's meeting, though?
Well, Christina, there is certainly a lot of speculation that we could see another policy tweak at the January meeting. Like you said, I think we're expecting some further policy changes in 2023. That's a certainty. But whether they're going to do anything at this next meeting soon after the December one, I think it remains to be seen, but we can't rule out any surprises because there have been some hints from policymakers that they might need to make further adjustments to their yield curve control policy to improve the functioning of the bond market. And we saw in December, straight soon after the Bank of Japan raised the cap, that the yields shot up to the upper limit of that band, which currently stands at 0.5%. And the whole point of making that change was to make yield curve control more sustainable. And if at the moment they're having to buy even more bonds to maintain that higher yield cap, it means, it might make sense to tweak it again, but it's not just about making policy more sustainable. Inflation is also accelerating in Japan. Price increases are becoming broader and broader across the economy, and we're likely to see inflation forecasts being revised higher at their next outlook report, which will be published on Wednesday. Now, the previous argument that the current inflation is mainly driven by energy, that's getting weaker because of the price increases becoming broader, and policymakers seem to be toning down their focus on wage growth, and they seem to be suggesting that the current cost push driven inflation could also make inflation sustainable, same as wage growth. Now, on the other hand, we have to bear in mind that Kuroda's term does end in April, so the Bank of Japan might want to wait until the change of leadership before making a big move. So the big move would be ending yield curve control altogether. So although there's some speculation of that even happening in January, I think if we do get a change, it's more likely to be a tweak. But it does make sense for the Bank of Japan to wait. Another reason, of course, other than Kuroda's term coming to an end, is the fact that we do have wage negotiations in Japan every spring. So these usually take place around about March time. So they might want to wait and see, first of all, to see the impact of the latest move, how that's going to affect the price outlook, and of course to see what the wage increases, how big the wage increases are going to be from those negotiations before coming to a decision about what to do next.
Now let's look at the market reaction, because the stars seem to be aligning in favor of the yen this year. How could it perform after the Bank of Japan meeting this week?
Well, I think, like you said, I think the things are changing. The outlook is certainly getting more positive for the yen. And definitely, if we do get a further tweak, or even just some changes in the language, that inflation is becoming more of a concern, and that they might not necessarily wait for a big wage rises to exit from their stimulus policies, that would certainly boost the yen even further, and we could even see the 120 level being tested against the US dollar. On the other hand, we can't also rule out a dovish surprise. For example, they might decide that they just want to bide their time and then refrain from giving out further signals just yet. And in that scenario, we could see the yen consolidating a little bit against the dollar, especially given the strong gains we've seen in recent days.
Rafi, thanks so much. This was a Forex Preview here at xm.com.